I'm going to make my wildest predictions so far on Bitcoin. There are a lot of videos right now saying Bitcoin's about to go parabolic, that we're heading straight to new highs, that the bull run is just getting started again. Maybe that happens, but not yet. What I believe happens first is going to surprise a lot of people. And if it plays out the way structure suggests, it's going to move fast. Let's start with the 3-day chart. We are printing a death cross right now. As I'm recording this, it has officially crossed. That's not noise. The last time we saw this setup, it only took 2 to 3 candles before the real move unfolded. These signals don't take months to develop. They trigger, they tend to move quickly, and they catch people off guard. Historically, the pattern is consistent. We get the cross. We get the initial sell-off. We get a secondary test, then continuation lower. We've already had the first sell-off. We've already seen a secondary push. If this structure breaks again, probability shifts hard to the downside. Could this time be different? Of course. But nothing in the data so far suggests that it is. Now let's zoom out to the weekly chart. Even if you remove Elliott wave completely and just look at the broader structure, the market is telling a clear story. We move in expansion phases and correction phases. Green expansion, red correction, and corrections are healthy. Nothing moves in a straight line. The issue right now is timing. A lot of traders believe this rally is about to turn into a breakout that sends us straight into new highs. I'm not convinced. This recent high is structurally weak. Momentum is not expanding the way it did earlier in the cycle. Volume is not confirming aggressively. And when highs form without strong expansion, they are vulnerable. Now let's bring Fibonacci into this, from the cycle low to the recent high. The first major retracement level sits at the 0.618 Fibonacci, right around $57,000. That is the golden ratio. In strong bull markets, that level often acts as the line in the sand. If Bitcoin pulls back into 57,000 and holds, the macro structure remains intact. But if 57,000 breaks with force, especially in a leveraged environment, the move accelerates. Below that sits the 0.786 retracement near $39,000. In previous cycles, Bitcoin has tested that level before finding major support. And here's where things get even more interesting. There is also a developing head and shoulders structure forming on the higher time frame. Left shoulder, head, right shoulder. And the neckline has already been breached. The measured move from that pattern projects into the low 50,000 range, around $52,000. Notice the confluence, 52,000 measured move. 57,000 0.618 Fibonacci. 39,000 0.786 Fibonacci. When technical levels stack on top of each other like that, you pay attention. Now here's the wild part of the prediction. I do not think we drop immediately. I believe Bitcoin could rally first. It's possibly into the $76,000 to $84,000 range. Why? Because that's where liquidity sits. It's where breakout traders pile in. That's where sentiment turns euphoric again. If larger players want to move this market lower, they don't build positions down here. They build them up there. They allow price to push higher. They let retail get confident. They let leverage build, and they move it. Markets don't crash from weakness. They crash from strength. So here's the sequence I'm watching. Step 1. A push into 76,000 to 84,000, clearing liquidity and creating bullish headlines. Step 2. Sharp rejection and daily structure breakdown. Step 3. Accelerated move into 57,000. That's the decision zone. If 57 holds, we stabilize. If 57 fails with momentum, 39,000 becomes the magnet. And if panic sets in, the measured move and liquidity imbalance could even extend into the mid-30,000 range. That's not fear. That's structure. Now here's the important part. This is not about being bearish. It's about being prepared. If I'm right, this will create one of the best buying opportunities of the cycle. But you don't buy blindly. You wait for the levels. You wait for the reaction. You trade structure, not emotion. And here's where I'll make this interesting. I'll make a trade with you, not a financial trade, a conviction trade. If this plays out, if we get the rally first, then the flush into those Fibonacci zones, I want you to come back to this video, drop a comment, and bring 10 new subscribers to the channel. Because a fisherman always sees another fisherman from afar. If you know where that quote comes from, comment below. Let's see who's paying attention. This market rewards preparation. It punishes noise. Shut out the headlines. Watch the structure. Understand liquidity. Know your levels. If you do that consistently, you don't need hype. You need discipline. If you found this breakdown valuable and want more structured Elliott wave and macro analysis, subscribe and hit the bell icon to stay connected. As always, stay disciplined, trade with intention, and God bless.